My name is Chelsea Kolstad. I'm an investment specialist with Service Credit Union and a certified financial planner, and I've been with Service for 8 years. Initially, when the markets started to have their correction, there was a lot of emotion that's tied to that because these are unprecedented times that we're going through. So, with the fears of the virus and then coupled with the market volatility, it was a really an emotional couple of months and weeks in the market. So, we were seeing a lot of our members coming in with questions about what should they do next. But once we met with them and reviewed their overall financial plan, we really found that over the long term, this short term volatility isn't going to have as significant of an impact as they may think it is. Most likely for an investor who has a balanced portfolio, they're not seeing as much of a contrast in volatility as what the markets are. And so, a benefit of working with professionals and investing in mutual funds is that you get access to a team of research analysts and portfolio managers who are constantly being active behind the scenes to provide downside protection to your funds, but also position them so that when the growth does come, you're going to see that full potential as well. It's completely normal to feel these emotions and this uncertainty that we're going through. But the recommendation right now would be to stick to the plan. So when we do build these portfolios, the portfolio managers know that volatility is going to occur. So the best plan of action is to stick to your long-term goals and don't make those short-term decisions based on your emotions right now. Now, we'd never know when the bottom is going to be formed in the market. So, until the uncertainty around the coronavirus settles, we probably will continue to see the short term volatility. But we know that the economy is resilient and we've been in volatile times previously, and they're going to happen again. So, this is a naturally occurring part of the markets. Right now, with the market volatility that we are seeing, it presents a really great opportunity to purchase into the market. So you're basically going to be buying at the low point. And yes, you may still continue to see that volatility over the short term. But when the recovery does start to happen, you're going to benefit from that full potential growth that it will see. So this is a very common question that we do receive during market volatility. And selling to cash basically means that you're going to exit the mutual fund market and just transition your money into cash. So right now, if you were to do that, you could miss the best days of recovery that the market will see. So it's very difficult to time the market. And just as quick as this correction happened, the recovery could come just as fast as well. So it's better to remain invested within your risk tolerance, ride this out over the short term so that you don't miss out on the best days in the market. If you have GICs that are maturing over the next short term or long term, it would be best case scenario to sit down with your advisor and take a look at how that GIC fits in your overall financial plan and how it's going to help you reach those goals. Because with the current rate environment, there may be some other options available to you. And if it is suitable, there could be a lot of potential from investing into the mutual fund market at this point. If you are currently in retirement and you are drawing on your investments for your cash flow, I would recommend sitting down with an advisor at Service Credit Union to review what your budget looks like and see if there's some other options that you can take advantage of. The credit union has some options available to defer loan and mortgage payments if that's suitable for you. And we can also take a look at your short-term budget and see if we can find some solutions for you there, as opposed to drawing on your investments during this time.